Hello everyone, this is Evan here from the Trade Risk on Wednesday, March 1st, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off the video looking at some individual sectors. Now, we had a huge day to the upside today. S&P 500 rallied 1.38% here in the SPY ETF to new all-time highs, right alongside all of the other major averages, all hitting new all-time highs today. And you can see the move today that we saw at 1.38% is the largest single day move we've seen since prior to the election. November 7th, we saw a 2.21% move to the upside on November 7th. This is the largest move since that date. So very impressive strength out there. Before we look at the daily chart, let's look at the weekly. I have Bollinger Bands on here today, and I just want to show you where we are in relation to those bands. You can see we're just tagging the upper weekly Bollinger Band, standard 2 and 20 settings, and you can see they are expanding outward. This is what you want to see in your strong kind of bullish moves higher or your sell-offs lower. You want to see those bands expanding outward, so we are getting that. And again, just tagging the upper band. Last time we did that was in late December, which was the first leg higher off of this election news. The second point I want to make here on the weekly chart is take a look at the MACD on my chart as I scroll out here. This is the furthest I can go back to the 09 lows, and you can see the MACD is actually at the highest point that we've seen going all the way back to the 2009 lows. Now, the MACD that I have is an 8 and 20, so it's not your standard setting, but it still shows the point and illustrates the point that we do have sort of the extreme momentum, extreme strength readings here where we currently exist here in the markets. And again, it's not a run out and sell everything tomorrow signal, but it's certainly a signal to give you context about where we are in the market, thinking twice about putting on new exposure, just understanding where you are in the bigger picture. So again, all-time, or not all-time, but highs here for the past 10 years or so in the MACD. Just another illustration of sort of extreme strength. As we go down to the daily chart, you can see we are again tagging kind of the upper Bollinger Band here on the daily time frame. Missed it by maybe about 10 cents or so, but still we were riding above that for this leg higher throughout February. We started to consolidate sideways, and then we popped higher again today back to that upper band. So again, the same sort of analysis that we've talked about over the past few sessions, past few videos, still do apply here. The market continues to march higher in an uptrend in a strong markup phase. We've seen tremendous amount of sector rotation and sector strength and leadership, and the market continues to sort of cycle through those different groups and continues to prop us up and then pop us higher. Today's pop feels a little different. This is certainly a very fast surge momentum move higher. Some would call this, this blow off top state that we're potentially in. I don't know if, I have no way of really sort of objectively knowing that. It does feel a little different, this move today, just given where we were in the context of all of this uptrend kind of grinding higher, losing some momentum in here, but continuing the uptrend. And then all of a sudden we have a sharp gap higher and surge with this sort of magnitude move. That is, certainly a little suspicious, getting a little euphoric, perhaps a little frothy, real frothy in here. And it's something to certainly pay attention to. If you're really tactical, the lows here from today would be a sort of momentum kind of gap fill play downward, maybe a failed kind of, exuberant move here. If we started to lose these lows and then come back down here and, kind of take things level by level from that point, I think that is sort of appropriate sort of thought process there in the very short term. If you're intermediate to longer term, again, I think you're more just looking at perhaps harvesting positions as necessary per your strategy, looking at that weekly time frame, noting that we are at these extreme conditions, and again, just raising stops, harvesting profits where appropriate. And again, bulls certainly dominating all time frames here. So depending on your time frame, your strategy, I think you have some tactics there, either using today's lows and then some of these levels down here at these fast moving averages and prior levels down around 235 and 237. Those are the points to pay attention to. Longer term, again, we've talked about sort of the thought process that you should have if you're in that camp. Now, the IWM, if we move here, this is again, where we've spent a lot of our attention and focus on in these recent videos is paying attention to this market here. And you can see it was two very tricky kind of moves here, where we had this very volatile session back down to 138 testing support, which ultimately held. We reversed, we moved higher, and then we saw another very sharp move down to support, challenging it, and that was of course yesterday. And then we had the big pop today and a climb and a close above to new all-time highs above these prior highs here. So again, a little bit more of a fade off the highs. Maybe this is again just this false kind of move, and we're going to play in this range here further, but for now there is some momentum here building in the small caps. And again, to bring it back home to what we've been talking about here, that the small caps would be the next leaders higher in this market, as they really have not participated as much as some of these other major markets this year in 2017. So pay attention to that. Let's see how we close out the week. Can we close above this resistance level, take out these highs, and continue to grind and march higher? If so, then I think you can continue to stay with these types of names, continue to trail that stop, and participate in this trend higher. The Nasdaq, the Q's Nasdaq 100 also breaking to new all-time highs here. Again, very, very extended here. If we look at that MACD here, going all the way back to 2009, we're well above any of these prior extreme readings here on the weekly chart, looking at that MACD. So again, getting really frothy. The party still wants to move higher though, so you got to be careful jumping ahead prematurely and trying to short this or average up too aggressively. Pay attention to some key levels. Again, I would just use today's lows and the highs here all sort of coincide in the same. So 131, maybe 130.75 right in here. If we start to lose that and fall back into this range, I think that gives you again some early indication that sellers and profit takers are starting to take hold here in the Nasdaq 100, which has really dominated the strength so far this year. So that wraps up the major averages. Let's get through some of the other major markets. TLT very notably getting crushed today, and this is what really moved the banks higher today and helped fuel a lot of this rally, was the surge that we saw in the banks off the heels of rising interest rates, which cratered the bond market here. So the long bond TLT back to this rising trend line of support that extends off the December lows. You're at a very key inflection point. This could be one large continuation pattern. Remember, we had a steep sell-off in October of 2016, all the way from almost 140 down to 115, 117. Now we've moved sideways, didn't get a very big retracement higher, got more so a consolidation through time. So if we start to lose this trend line, start to lose these lows, we could be back to making a second leg, big structural leg high, lower here in TLT. So that's something to pay attention to. We're at a key spot. USO, continues to move sideways. It just got to keep extending these lines sideways, because that's all that this market wants to do. And this is in the face of a dollar that really ripped higher today. So that's pretty interesting that USO did manage to continue to hold on to this general area, even though the US dollar did gain so much ground. So same comments that we've been talking about here, looking for a breakout or down of this range. Tried to play this myself a couple of times in here and just hasn't materialized, so still need to wait. I'm sure you're going to see an uptick in volume and expansion in range when that move starts to happen, so continue to pay attention to it. I think it's very interesting. UNG, also one that we've talked about recently. You can see a little uptick in volume here as it's sold off into these 640 lows. Again, UNG is tough to use. It is finding support roughly where June, April, May, July was. If you were to look at the spot futures contract, though, there is some larger support, which would probably coincide more along the lines of 620 or so. Again, this ETF is not exactly a precise vehicle of tracking the price of natural gas, so keep that in mind. Maybe we have one more little leg down, capitulation low down to the 615, 620 level, which coincides with $2.50 natural gas. I'd pay attention to that. GLD metals selling off a little bit today. Did recover it intraday, but at least on the open, we had a gap lower to some previous levels in here. Bulls finished strong, so there's still a bid here for metals. Silver, similar situation. We had a small gap lower, finished near the highs, so both of these metals continue to grind higher, and that trade has been working now for certainly a couple of weeks, months, all this year really, in both gold and SLV. So with that, let's take a look at some of the individual sectors. XLF was the huge winner today, up 2.85%, really helping fuel that market higher. That's a very sharp move, uptick in volume, very similar to the moves we saw back here in the beginning of, or actually post-election days in November of 2016. So tremendous amount of strength. They are overbought. The banks, we know this, but the trend does still remain strong, and this did emerge from a pretty hefty, sizable consolidation pattern here for a couple of months, just just at the beginning, mid of February. So XLF really continuing higher. XLK also continuing its march higher. I mean, this had this pretty historic streak here of just consecutive higher closes with zero volatility. It did experience a little bit of volatility recently, but again, today it's back off to the races, 1.41% higher. XLV put this out in a post. This is one of the top performers in February. More defensive sector in nature. This is healthcare. If we look at a monthly chart, take a look at the pattern that this is potentially emerging from. This is over a 2-year long base on a monthly chart. So this is very interesting, unadjusted for dividends. Keep that in mind, but saw some nice strength today. One of the only defensive sectors to really kind of hold in there. XLV is what we just talked about. XLB was the next one. Materials seeing a quick pop to prior highs here. Remember, we had this potential lower high sort of pattern in play, and that's obviously been invalidated. Today it saw a sharp move higher here, closing at new all-time highs in XLB. So materials catching a nice bid. XLE also seeing a nice turnaround. The moral is there's a lot here that's working. XLE, though, this was, again, energy, which was beaten down pretty hard. The one sector that was getting crushed since the end of 2016 saw a nice sharp turnaround today, 2% move higher. Healthy. It's dealing with these 20 period with some of these fast moving averages now, so would expect some supply to be in here, but this initial snapback still seems to be in motion. And then finally, XLY, the discretionary ETF here, giving an interesting look. It did pop up to new highs here on some pretty strong volume, but then kind of ended in the midpoint of today's range. So a little of an interesting look there. Let's see which way, let's see how comfortable this one is trading at new all-time highs here in the XLY. So that is the wrap up for today, March 1st. I hope you guys had a great trading day. Thank you for watching, and I'll talk to you again soon.